The crash just got delayed and a new all-time high is coming thanks to this 25-year cycle which has accurately predicted the last 3 crashes and mega pumps. But before that, it is very important to understand the monthly market structure that is developing. So let's start from 2008. This was the crash. So this was a low. Look at this higher low, another higher low, another higher low, and recently this higher low. Then we are getting higher highs. Continuously we are getting higher highs. So this market structure dictates that the price will make a new higher high. Now in addition to this, I want to show you this trend that the market is trying to develop. Let me just quickly put this over here. Let's zoom out a bit and look at this point over here. Somewhere around here, 19,000, 20,000 will be the new high in the market given this structure that we are trying to follow. Now, like I always say, we cannot blindly believe on one indicator. So let's just try one more thing. This is the all-time high. Let me put up the fib levels and look at these extensions. 1.272 levels sitting at 18,500 and the 1.618 sitting at 20,600. So this market structure is dictating 18,500 till 20,600 area, and by that time the monthly RSI would go into the overbought region. Now we are done with the market structure. Now I will show you the 25-year cycle I was talking about, which is over here. This is extremely important. So the blue line over here is the US Fed interest rate and the orange one over here is the Nasdaq itself. There's a very important correlation that is happening over here. Starting with the dot-com crash, look what happens over here. Let me zoom in a bit more. So interest rates were increasing, then the Fed decided to pause the interest rates, and look at this sharp decline in interest rate which coincides with the sharp crash. Now this pause over here is very important. Why? Because this signifies a new top in the market. Look at the Nasdaq over here, and this pause is roughly 6 months over here. Let's move on. Look at this huge pump in the interest rates. Again, rates have been paused for roughly 1 year. We are getting another top on the market. Look at this huge drop in interest rates and the market falls straight away. Let's keep moving forward in time and see what is happening. Once again, before COVID, huge increase in interest rates, again getting this top over here and some small corrections happening on the way. But look at what is happening, insane pump in the rates. So imagine when the interest rate will pause for roughly 6 to 12 months. That is the time the market will create a new all-time high similar to what it has done before the COVID crash, before the 2008 crash, and before the dot-com crash. So we have to keep an eye for the time when interest rates become flat. This is the time when the US Fed will clearly signal to the market that we are not going to increase any more interest rates, and we are just looking at what is happening with inflation and the overall economy, and then we will get a new all-time high. Now I want to talk about these pumps in the market. These look very small, but in fact these are quite large. Let me show you just this pump when the interest rate was increasing. So this is 289% pump on the Nasdaq. Let's check this one over here, 167% pump. And then we experienced this COVID pump of roughly 106%. So given this pump, let's just assume a safe level of 100% pump from the recent lows. Look at where we are getting, 23,400. This is just insane. But not everything is extremely bullish. Why? As you have seen, when the interest rate become flat for 6 to 12 months, there is a significant drop in the market, and that drop will happen. So let's see what that drop looks like. So this one over here, 2000 dot-com bubble, 78% drop in the market. 2008 financial crisis, talking about roughly 50%. COVID, again we're talking about 13%. Recently we saw this dump over here of roughly 30-35%. So if the market decides to dump from 23,500 by 50%, we are talking about something around the 12,000, 11,000 area. But this is a very long-term thing. As you can see, this is a monthly chart, so it takes years for this to play out. And similarly, this pump can take anywhere between 1 to 2 years, and then flat interest rates. So yes, this is a very long time frame analysis, and you should be aware of this because we want to catch all these crazy pumps that can happen in the market. Now going back to this chart over here, I want to show you this cycle, what will happen. So pump happening, test, again go back here somewhere around 20,000, 19,000, come back down to retest. So this retest looks like around 13, 14,000. Once again reaching similar conclusion, but this takes a lot of time. So let's just count from this point over here to this top all-time high. We are talking about roughly 800 days, so more than 2 years. Let's check this point here. What will happen if we go forward 800 days? So we are talking about end of 2024, and this cycle perfectly aligns with the US elections. So at the time of the US election, which are in November, there will be a new top in the market. When we are talking about long-term trends, we have to talk about the dollar index also, and let's see what is happening on the monthly chart. So we are seeing something of this sort is currently happening. Let me just complete this channel very nicely. It is trying to follow this part over here. Now the thing I want to show you is, look at this. This was 2001. Dollar index was at 120, huge drop, and now we are stuck in this bear flag. So a continuation of this drop can take us towards the 96 level, where the moving averages are also lying, and as this is a bear flag, there will be a point where we will see a breakdown from this, a retest and continuous rejection, which can take us back to this area, which is around 72, 75, and this will coincide with the new all-time high I was just talking about. So this is the sort of action on the monthly chart that we want to see. Now one thing we need to be careful of is this action in this range, roughly 100 to 103. Price is trying to consolidate over here. If there is a breakout towards the upside, we can go back to 115, 16, which will create sort of a double top with this area and can cause some short-term pain in the market, but overall we are still in this bear flag, and hopefully we see a breakdown, retest and continuation downwards to this area, which can give us the new all-time high and a major pump in the market. Let's quickly check the overall fear and greed index, and we are sitting at 53 in the neutral range. Last month we were in greed, so a little bit retest happening just as we expected, and hopefully we see a nice bounce towards extreme greed, at least in the short term, where we can see 16 and a half thousand. So let me know what you think about all of this. Do you agree with this analysis or not? Put your thoughts in the comment below, and if you find this analysis interesting, don't forget to subscribe, like and share. Hit the bell notification so you are notified whenever we upload a new video. If you want us to analyze any specific asset, whether it is cryptocurrency, commodities, stocks, whatever, just put that in the comments and we will try to make an analysis video for that also. Our previous analysis is on the screen now. You might want to watch those. And once again, a gentle reminder, market is extremely volatile. If you're actively trading, please consider using proper risk management. Thank you for watching.